All right, everybody. Going to be going over a trade that I literally just took a couple minutes ago. Biggest thing is overall market direction. We had a bit of chop going around 5-minute time frame. You can see a lot of chop going on at these highs. We've been in a more of a bearish regime here for a little bit. I think the most important piece of information you could possibly see on this chart is we start liquidity, and on silver we didn't. So we're looking for a bearish change in the marketplace, and that's exactly what we're seeing. 15-minute time frame, 1 hour. We're seeing a lot of compression in the market right now. So what we're looking at here is New York AM session. We saw the SMT clear as day right there, right? So you could have shorted right here for a long-term position. The main reason why I'm saying that is because remember, we have the SMT on the daily time frame. And then we also have it on the 15-minute, 1 hour, where you could see that there's clearly a discrepancy in the marketplace here. I'd short somewhere in this area here. If not, you could easily look for something from the high down to a low displacement leg somewhere in there. You could look for an opportunity to go short, or even from the high to a displacement leg here in the Asian session and short from up there if you caught that. So from the trade that I took today, the main reason why I took it was swept liquidity down here at the bottom. Same thing on silver, swept it, and then we started to see the push up a little bit. So I believe the market could go up all the way up here to 67 flat, maybe even 68. I'm just mainly looking for small scalp, $1,000. You know, it's really all you need. From what I'm looking at here, small scalp from the bottom all the way to the top, we're seeing volume imbalances. So they're not showing anymore because they're mitigated, right? But from here to there, volume imbalance not filled in yet, and then we have volume balancing from here to here, big spot right there. And you also have a couple up here, as I was saying, pool liquidity, volume balances in there, and there's one up here that they haven't hit yet. Here hasn't hit yet. Here has hit, but it's also a pool liquidity. So a lot of liquidity on the upside. So whenever I started to see this start to happen, so we had the SMT on the 5-minute, right? So higher, lower, but I liked the gold trade a lot better. Now remember, this is very, very, very important for any trader that's looking to trade this kind of strategy to understand. Where we're at right now, see how you have the SMT from the lower low to the higher low. Whenever I wanted to enter silver, it's already up here. You understand what I'm saying? So what I'm looking at here is the SMT happened back here. I pretty much came to this setup in my lap. What I'm looking at is I saw the SMT and I started to see the market start to retrace aggressively. And even if I wanted to enter on the trade here on silver, look how illiquid it is. Lots of dead candles, I guess you can call it. Not a whole lot of volume in the marketplace. Gold, it's much better, right? It's not quite as illiquid as silver, but it's much better, right? So whenever I started to see the compression starting to happen, you can see how on gold here, or on silver here, you see how it was a lot more bullish. It's very, very bullish. Over here, you see you have a bit of a retracement. So whenever I started to see this start to happen, I started looking for a reason to get in. So I saw the imbalances, right? I'm seeing the market fill in volume imbalances, fed into an order block beautifully, right? So we got into here, right? You're respecting the midpoint. You see that? Respecting the midpoint of that. Now, from here, I am really just looking for a stop loss and a TP at this point. I mean, this isn't my exact setup. It mainly is just two candles that line up in the direction. So getting in from here, maybe on silver over here, right? So start to get in silver here. See how this bearish, this is bullish. I was at the computer at that time. So the thing that I wanted you guys to understand that's very important is silver is ahead and gold is behind. You see how much higher it is. So since it's so much higher, I am not going to be looking to trade gold. I'm not looking to trade silver because my stop loss is going to be down here. You see what I'm saying? To get a 1 to 2, it's going to be way over here. I'm not doing that. So from gold, I'll show you the entries here in a second. From gold, your stop loss is a whole lot tighter down here, and your TP would be a whole lot higher up here and all the way up here at the pool liquidity. This is my executions, right? So the first one was a 1 to 4.6, the other one was a 1 to 5. I'm not going to show you the trader rate account. I don't really want to. I don't really want to have to find a way to blur it out, but I'll put it on the screen here. So the entries, the stop loss, the take profit, they're all in very conservative areas, I'd say. So from the stop loss down here, it's clearly making higher lows and higher lows. If the market were to come down and take me out on this low, I don't want to be on the trade anyway, to be completely honest with you. What I'm looking for is for the market to push up and respect the previous swing low. All right. Now notice how this was respected by this one respected by this one, and this one was respected by this one. So this is not technically a swing, but it's still a candle that's respecting the previous candle. So it's all getting respected, these extremes, because you have like the I guess the out of the ordinary swing or whatever, but swing low, swing low, swing low. I gotta turn this off. My buddy's indicator. I don't even use it that often, but it's pretty great as like a as a tool. Sometimes I use it, but anyway. So from here to here to here, it's getting respected, and I started entering whenever it was looking bearish on the 1 minute time frame. Remember, manipulation candle, right? Happens on every time frame: 15-second, 1 minute, 5 minute, all the way up to the daily, weekly, monthly. It's all the same. So it makes a manipulation on the bearish side if it's bullish, and a bullish side if the candle's going to close bearish. So I understand that. So when the market is pushing down lower, I'm looking to enter. And I entered on this candle right there. So the market came a little bit bearish, and it was like all the way down here. Put on a 15-second. So the market was all the way down here whenever I entered. It was bearish. I entered. It was bearish. Started to become bullish. I entered again. Right, so on the way down, it's already bearish. I'm looking for it to end the bearish cycle. It's not gonna be bearish for much longer, and if it is, hit my stop loss. So I bought in, didn't have time to put my stop loss in yet, and I was like, all right, so it's starting to be bullish. I bought again, and then after that, I put my stop loss down here at the bottom. I was mainly looking for a TP, but this doesn't need to be here anymore. So that was my my entry. I guess my average was in between those two. But from here, it went, I'm telling you, straight to my TP. You know what I'm saying? And this is all very, very, very important information, from the compression to the bearish cycle, because like the overall bearish cycle. And since it's bearish, we've yet to have a significant bull run into a pool of liquidity. So that's what I'm looking for. Market compressed, SMT, and you started to see the market start to expand. So now we're reaching for this pool liquidity, and on top of that, we have a new day opening gap up there, plus the daily open, the price level from here, the daily open, right? So now we're going to be looking for the market to take out this pool liquidity and respect this level of daily open, or we can continue to go be bullish and take out some other, to the view up or whatever. But yeah, so trade was excellent. If you have any questions, Discord, message me, whatever, and we'll go from there. Yeah, so God bless and take care.